The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
Hey there, this is Darrell Martin with the Diagnostic Trading Hour. Hope y'all are having a great day here. We got the markets falling like crazy. And just looking at a few different things on the market we've been talking about. We talked about it this morning on the 9 o'clock show. And again, this is a Diagnostic Trading Hour. And if you have any questions at all, please feel free to give me a call. You can reach me at 877-927-6648. Again, that's 877-927-6648. Also, I went ahead and posted in the Tiger's Den and also over on Tiger TV the deviation levels for the day. So you can view those right now while I have them up. And looking over at a few other things here. First thing we do every day is we look at where the market's at. We keep you up to date. So if you're not in front of your computers and you're wanting to know, or maybe you're just watching a few charts and you want to know where everything is at, we make sure you know. So right here on the index futures, let's go ahead and start out there. We got the S&P down basically 19 points on the day right now. We got the NASDAQ down 51.5. We got the Russell down 15.4 points, and the Dow is down 167. All of those are over a 1% move, and they're pushing 1.5% and 2%. Actually pushing 2% now on the NASDAQ and the Russell. So massive falls going on over there after the big down moves we saw over in Europe. Looking over at copper. Copper is down negative 0.1045. That's a 2.79, almost a 3% move on the day. Silver is down 0.753. That's a 2.2% move down. And gold is down 21.5. So that's a 1.2% move on gold. I mean, it is a trader's dream today. Everything is moving. Looking over at a couple other markets, the only markets that we're not just seeing, I guess not everything, right? The only markets we're not really seeing a big move on is over on our ags. So we got corn up 3.25. We got soybeans down 7.25. So pretty small moves there, only 0.5% only. But that is small for the copper indexes. And then, or not the copper, but the agricultural indexes. Looking over at our energies, we got oil is down $1.81. Nearly a 2% move down right now on the day. And natural gas is up 0.042. That's a 1% up move on the day. And then let's go ahead and check out our currency pairs. Dollar is gaining and everything else is getting slammed. We got the euro dollar down 37 pips, the pound dollar down 44, the Aussie dollar down 39. The U.S. yen is up 3, the U.S. franc is up 39, and the U.S. Canadian flying on up at 71 pips up on the day. So, again, that's just your market wrap for the day, and we like to make sure you are informed as we look at all these different areas in diagnostic trading. And go ahead and get you up to date on what else we look at. In diagnostic trading, we're all about minimizing risk, maximizing leverage, and being one step ahead of the markets. And how do we minimize leverage and maximize risk? Well, as you know, if you listen in, we trade on Nadex. So go over to TFNN.com and click on the Nadex banner. If you do that, you can actually open an account today, and it's literally less than $100 to fund the account, okay? And now, not less, it is $100 to fund the account. But it only takes 5 minutes from start when you click on Create Account to fund it. You can literally do this in as little as 5 minutes and get going right away. And, do you want to put in more than 100? I would say yes, obviously. But can you actually trade with only $100 in an account? Yeah, you can do $5, $10, $20, $50 trades. So there's a lot of different trades that you can do inside Nadex on their binaries and their spreads. Also, you can go over here and you can sit down at the products, or up in the top where it says Our Products, click on Demo Account. You can have a demo account, you get access for a couple weeks, and you can get that extended. If you need help on how to get that extended, just email me, dmartin@tfnn.com. And again, demo account, put in your username that you want, your first name, last name, phone number, and email address, and you'll get hooked up with the demo account in less than 15 seconds, and that's if you're a slow typer. They'll send you an email with a password in it. As soon as you get that password, you can log into the demo account, just right up here at the top, right here, log in. And you can even log in on their mobile platform. And if you want to log in on your demo account on the mobile platform, just put your demo username, a demo-username, whatever that is, and your password. Or you can log in with your live account on the mobile platform as well. And it works on Android, it works on Windows phones, and it works, of course, on the iPhone. And it's a really great tool that you can take advantage of. But why does this help you minimize risk and maximize leverage? Well, every single product on Nadex has capped risk, meaning whatever your risk is, let's say your risk is $20 on the trade, that is your maximum risk. It can't get any bigger than that. And the market can move against you as far as it wants to, and your risk doesn't increase. So and here's the big thing, okay, the huge piece. You can't get stopped out. So if you've been getting stopped out of trades, if you've had a history of getting stopped out of trades, which means if you've ever traded, then you know how bad it is to get whipsawed. Market moves against you right after you get in, and then you get kicked out, and then what happens? It goes right back in your direction. You were right. You didn't have time to be right. So Nadex gives you time to be right because it can move against you, but you're down, but you're not out, okay? The final bell has not rung. And as long as it comes back in your favor before expiration, before the bell rings, then you're actually able to potentially be profitable on that trade without adding on additional risk. And so, just the binaries are one product, the spreads are another product. Both of them are great products, just depending on how you like to trade. I use both. I love the spreads because they really mirror the underlying markets. I like the binaries because they're really fast, even in a slow market. And you can use both products in a lot of different ways. And I'll show you right here. We can go over here. We can click on the box spread scanner inside our upcoming diagnostic trading room area. We're a member section for the spread scanner, and we post the deviation levels here. We also are posting, all the different spreads and everything else, so you can check and you can see exactly how things work over here. And so if I go over and look at the S&P 500, I can actually look at all of the spreads that are available, and it does all of the math for me. And then I can narrow it down and say, you know what? I only want trades that have at least a $2 prop potential for a $1 risk, and I don't want to risk more than $100. And it'll narrow down my choices for me. And so if I want to buy or sell, it's going to show me which ones are available that actually meet that criteria. And it tells me how far it has to move, which is, you got four things, I guess, you really want to look at when you're choosing your spread. Okay? How long does it have till expiration? All right, that's pretty important, right? Because if it expires in 2 minutes, that might not be the best one for you. And then the next thing is, what is the break-even distance? How far does it have to move to be break-even? One of the questions I get a lot is, wait a minute, why is the price different than what I see on the underlying, on the futures market? Well, that's because it has some premium built in. But it doesn't have a week and a month and a year and all that stuff built into these spreads. It has a day or maybe an hour or a few hours. So the premium is very small, and so that'll be your break-even distance right there. Now, the break-even distance isn't always your premium, because if it's way out of the money, that's just because it's out of the money. That's a whole different topic. And I might even cover that a little bit today on the show, talk about what in the money, at the money, out of the money, deep in the money, how that works on the spreads. But on break-even distance right out, how far does it have to move for you to be break-even? Then you look at your risk. Well, why? Because you have time risk, okay? You have direction risk, how far does it have to move? And then you have dollars at risk. And so now I'm going to look at my dollars at risk if it qualifies. So I may not want these 16-point moves that have to move on the S&P because they're so far out of the money. And so I sort of disqualify those trades. Now I can only see the ones on my scanner that show the ones that qualify. And then I can go down and I can start looking at, risk reward, timed expiration, things like that, such as this one has a $10 risk and 45 minutes. This one has a $17 risk and 105 minutes. So I may just want to go ahead and choose the 105 minutes. And I can move down and go, you know what, for another $1, I can literally have another hour, or more than an hour of time. So I can get rid of that one. And so it makes it really easy for me just to, narrow down my choices. And then I go down here a little bit further, and I'm like, okay, now I have these two. This one's $18 risk, has to move 3 points. They both expire at the same time. This one has $48 risk, but it only has to move 0.9. So now I sort of have to make a choice. How far do I think the market's going to move? And if I think the market's going to move a lot, then I may choose the one with lower risk. If I think the market's not going to move that much, then I may want to choose the one with a little higher risk but less movement risk. In other words, it didn't have to move as far for me to be profitable on that trade. And then one of the other things I like to look at is risk-reward ratio. That's the fourth category. So we have time, how far it has to move, what the risk is, and really what's my risk-reward ratio. So on this trade right here, what I can see is I have a $14 risk, or a $14 profit potential for every dollar at risk, versus this one has a $7 profit potential for every dollar at risk. So that makes them very attractive as far as trades go. And they do release new spreads basically every hour once the market opens up for 2-hour expirations up until the last couple hours before. And so you can go in there and you always can find one that's close to the floor and the ceiling. It's great. It's awesome how they've set up the entire thing. And so with that, let's check out one other thing that I always like to look at each and every day, and I like to go through the fundamentals. So on the fundamentals, let's go ahead and talk about what is going on in the market right now and what we have set up. So we have, let's see here, we got going on this morning. We had the German PPI came out at expectations. So no big deal. Just trying to see if there's anything late or late last night. Nothing big late last night. So this morning, yeah, again, German PPI met expectations. And then the European current account came in worse than expected. Came in at 8.8 billion. They had to be 11.3 billion. And the current account is the difference between their imported and their exported goods and services. So basically, it's directly linked to currency demand. And are people buying or selling euros at the end of the day? That's sort of how they look at it. So that number was lower than they thought it would be, and that's not a positive thing for the currency, hence the down on the euro. And that came out at 3 a.m., let's see, Central Time this morning. And then we got the EU Economic Summit, and Spain, or not Spain, but France and Germany are fighting over how they want to deal with Spain and everything else, and so there's some gridlock there. And we'll see if that ends up or if it just keeps crashing down. But so far, nobody is happy with what's happening at that EU Summit, and that has added to the volatility. And, of course, then we scroll over at the public sector net borrowing, and that came out of Britain. That actually was a little better. So basically the spending and the income actually improved. They spent less than they brought in. And so that was a good thing for the pound. And then over on the Canadian dollar, they had their core CPI come in. It did come in below expectations. And not a big surprise. It hasn't met expectations too much recently. But they expected a 0.3, and it came in at 0.2. And that's the change in the price of goods and services purchased by consumers. And again, they thought that that number would be rising, so that's more of a deflationary thing versus inflationary on the U.S. Canadian. And as we already talked about, the U.S. Canadian actually is up, meaning the Canadian dollar getting weaker, the dollar getting stronger, and it is the biggest, it looks like, moving currency right now. Out of the big ones there, it's moving, like I said, it's moved 7.74%, so 0.75% up. And then looking on over there, their CPI, that's not as important of a number. And then looking over at the existing home sales, that actually came in better than we thought it would come in. It came in at 4.75. They thought it'd come in at 4.73. And that did help out some of the stocks that are linked to that, but overall, it did not impress the market. And so the market really just did not decide to rally on that. And the big thing is, of course, earnings. Google, blowing up yesterday and being down literally, let's see, well, I mean, it's like 10, 12%, and, it had this little move around everything else. Chipotle opening up today, and it's down 14% when I looked at it this morning. So, I mean, just a lot of the earnings are definitely being disappointing. So the economy is not improving despite all the QE. And QE is serving, if anything, just to try to slow down the crash. And speaking of crashes, today is the 25th anniversary of the 87 crash. And so a lot of down movement on a down anniversary day. Talk about your seasonal cycle, I guess, right? Anyways, stay right there, folks. We're going to be right back after this commercial break, and we're going to check out some deviations and how you could avoid them and how you could use them going forward.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And one of the things we were talking about earlier was we were going into and just looking at the crashes and things like that. We talked about back in 1987, the Dow actually dropped 508 points, and that was a 22% loss. And second biggest one-day drop in the exchange that it experienced. And they actually, it was the first time they invoked the circuit breaker rule to halt all trading. However, there was a big issue, and people got really upset because they literally halted all trading for the day. Okay? And so that's where they came back in, and they changed the circuit breaker rule to go in where they halt trading for like an hour, 2 hours, or the rest of the day. So like an hour if it drops 10%, 2 hours if it drops 20%, and then 30%, et cetera, and respectively until they just close the market for the day if it keeps dropping. And the idea is having the trading halts with the breaks to let investors cool off and reevaluate their positions, but not have to wait for a new day to be able to hop in and do something about it. And, of course, right after that, we had the Black Monday, which followed by the Terrible Tuesday. And that happened back then, and that was a day where the exchange systems didn't perform well. Like they actually had issues, and people couldn't even complete their trades. So there was another major drop in, let's see here, looking at different ones. October 13th, 1989. We had that mini crash of 1989, and it was led off by a news story that came out about UAL Corporation, the parent company of United Airlines, and that whole bill like broke down. It's supposed to be a big leveraged buyout, and when it fell through, it triggered a collapse in all the junk bond markets, and it caused the Dow to fall 190 points, or 6.91%. So, and then the Asian financial crisis in 1997. That happened basically with a lot of happens in the fall. And what happened was the Dow suffered. It actually went down 7%, 554 points on October 27th, 1997. So it got, now we call it the 1997 mini crash. But the Dow did quickly recover from that crash. And then, of course, we have 2000, and all sorts of things that came out, 2000, 2001. But then, of course, we have May 6th of 2010. And the Dow Jones actually posted its largest intraday percentage drop since the 1987 crash. And that was, if everybody remembers that, I'm sure. So it was the 998-point drop. And it was, as we know, it's called the flash crash. And the drop occurred in, minutes. And then it was really interesting. I don't know if you were on. I listen to the Pit a lot when I trade, get a live Pit feed. And on the Pit, it actually has the announcer's talking to the guy that's moderator, and he's out there talking, and he's talking about literally about what's going on, and he calls out. He's like, Bank of America doing this, JP Morgan, just reading everything out. And he's like, hey, folks, they just lowered the circuit breaker, like intraday. They lowered it. He's like, I don't know what's going on. The market was already trending down. He's like, they just lowered the circuit breaker. And he's like, I don't know what to tell you, sorry, but they just moved it down. And it was pretty far away. And they moved it further down. Well, the market then crashes down, the flash crash, just flying down, hand over fist, and stops, and then turns around and goes back up. So what I found really interesting when I was listening to that is that the exchange knew in advance where the market was going to go. They saw all the orders. They saw where they would run out. And they knew that, hey, if we move the circuit breaker to this point intraday, then the orders will run out and it'll bounce back up. And it did it. It made a pretty decent retracement on that flash crash day, but it would actually have got halted if they didn't move that circuit breaker. But just to let you know, it's all, one thing I talk about diagnostic trading being one step ahead of the markets and everything else, it's all about where the orders are. That's what makes markets move, period. That's it, okay? Everything else is us trying to figure out where people are placing their orders. Whether we're doing fundamental, technical, patterns, seasonal, statistical, whatever, it's where people are placing their orders. And they saw where the orders were, and they moved the number so that way it could drop and fly back up. And, it's just really, interesting how you put all that stuff together. And they're trying to figure out different ways to deal with it. And but they still have not really resolved how to do flash crash resolution issues. And, there are other ones we can go back. Of course, you can go back to 1920. And there's some, big issues back then. We had the Black Thursday crash back in 1929. And that started the Black Tuesday on October 29th. And basically that is blamed. It basically came right before the Great Depression. And the exchange actually unveiled a 15-point program aimed to upgrade protection for the investing public. And that's where a lot of the, U.S. Securities Exchange rules and things like that came into play. Now, I know they actually started in 1934, but they put a bunch of new rules in 1938. And anyway, so there's some market history for you about crashes on the anniversary of the 1987 crash. So anyways, let's go ahead and check it out, October 19th here. And let's look at what we got coming up on Monday. We'll cover that right after we get back from this break, and then we'll go into some deviations. Stay right there, folks. Call in with any questions.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour with Darrell Martin. And I want to go through now and do a few more things. Again, if you have any questions, feel free to give me a call. You can reach me at 877-927-6648. And again, whether it be NADEX, stocks, futures, forex, options, the market in general, just let me know, and I would be glad to help you out. All right, so now I'm going to go ahead and I'm going to fly through these deviation levels and go through a few different things with you, just looking at the markets and look at how they're doing, what they're doing, and how the deviation levels work. Basically, it's understanding the concept more than anything of that there is a deviation in the market, and that you want to know that. That's the statistical part of trading. And, there's fundamentals like what's going on that drives the market. There's, seasonals. So what drives the market seasonally? October is, of course, we call it the jinx month because of all the crashes that have happened in it. Just over and over and over again, whether it be, October 2010, right now, if it keeps going, we do have some days left here. And, just multiple crashes have happened during this month. So that's a big seasonal cycle. And then looking on back at some other things, and so we got fundamentals, we got seasonals, you got your technicals, obviously, pretty much everything pointing south, and then you've got your statistics, which is just your deviations. And there's different kinds of what you could call pivot points or deviations, all right? And on pivot points, they use just a formula of like previous day numbers, open, high, low, close, stuff like that, put it together and come up with a number, and it's just sort of a number that's supposed to work. Not for any particular reason. It's just somebody made up a number and used it, and it's become popular. There's also, the use, so that's pivot points. You have standard deviation. Problem with that is that always looks at past price movement and has nothing to do with what's going to happen today or tomorrow. Okay? The next thing you have is you have something a little bit different. That's what I call diagnostic deviation, where I use implied volatility, meaning how much is the option premium pumped up inside the options. So if the market thinks the market's going to move a lot, now when I say the market, I mean whether it be the S&P or Apple or any other company you can think of, or oil or gold or silver or euro dollar or whatever, what do the options say? How far do they say the market can move? And the way that you know that is basically they become more in demand, such as whenever you're going to have an earnings announcement come out, and I've talked about this recently on the show a lot, then implied volatility is going to go a lot higher because there's a big expected move. It comes out, and then implied volatility drops quite a bit. So it may stay up if the market drops, huge, but then it will decline shortly thereafter because the big move has come out and it's done. So, that implied volatility is huge. It's what the market expects. It's not what some formula says. It's not what you think. It's not what some people think. It's not simply a random number of a few people's poll. It's literally, it's not a poll with a few people. It's going through and it's looking at multiple months and taking the implied volatilities out of all those months, putting all those together, and then applying them directly to a deviation style formula. And then I like to apply it to one-day deviations for intraday trading. So that's how I use it. And then we can look over and we can sort of see, what those deviation levels are. And for instance, I'm looking at the S&P right now. And the one deviation move that we had on that was down to 1437.75, 1438. And we did see the market came down to that level, and it actually stayed at that level for about 20, 25 minutes right there. It just hung out at the one deviation level. Often you won't see it, you'll see it bounce off that. If it does break through it, then you're usually looking for a move literally down, basically another half deviation. So in this case, that's like 6.75 points on the S&P. So if I just go in and I look at the S&P and it's trading like right around, we'll say 1438 at this point, okay? And that's, right around where our deviation level is, and I minus 6.75 from it, then I'm going to get, 1431.25. So if I take the exact deviation level of 1437.79 was the exact deviation level. And again, I subtract 6.73, the exact number there. And I get 1431.06. So basically 1431 is where I would expect it to drop to next. And so I'd be tightening my stops right as it hit this level and be looking for a potential reversal, okay? But I'm gonna watch the volume. Now notice the volume right here. It hit that deviation level hard with a lot of volume. It didn't break it though on a lot of volume. It actually decreased the volume, but we did see a pullback, and then it finally did push through with a decent amount of volume and pushed on through there. So where do I think it's going to go now that it's pushing through? Down to 1431. And we can see right here at 1431, right there, it basically came in and stopped just shy of that. Did a pullback. Now it's going back down. Now if it decides to break this on volume, which right now we're not getting a whole lot of volume on the current downtick move, but if it did, then we go down to that 2 deviation level, which would bring us on down to 1424.35. That'd actually be a full 2 deviation move. You don't see those too often at all, but they do happen. And so, you want to be aware of them. You want to know how far is the market expected. Why is this so important as a trader? Why does this matter? There's deviation levels and all that stuff. Because, again, it's the expected move, and it helps you have a realistic expectation on how far the market's going to move. So when you're looking to take profits, things like that, you know where to take profits, you know where to tighten stops. If you're looking at, say, trading spreads, okay, well, how far is it to break even? And therefore, is this a good spread? Because if I don't think it's going to move that far, then I may not want to do that spread. So it really helps you filter your trades. It gives you at least profit target levels. And it doesn't mean it won't move further, but usually it doesn't. And so looking at this obviously is a big day. But it did, like I said, stop right at the 1 deviation. Well, 1 deviation is 68% of all expected price movement for a normal day. Meaning there's a 32% chance it'll actually go further than that. So there's basically a 1 in 3 chance it'll actually move out of it. Well, a 2 deviation move, there's a 95% chance it won't break out of it. Okay, so it's a very, very, it's expected to contain basically all movement. You're really going for 1/2 to 1 deviation on most days. But on a 2 deviation, 95% chance it will go beyond that. And then a 3 deviation move, okay, that'd be actually all the way down to 14.15 on the day. A 3 deviation move is a 99.7% chance it won't go lower than that on that particular day. And it's a different number every day, different level every day. But it's always the same percentage. So 99.7%, meaning there's only a 0.3% chance it'll go lower than 14.15. Okay? So, or really, I guess 14.16 is the number I have, because I have 14.15.99. So looking at that and understanding that concept, you're like, okay, well, it's not going to go to the moon. It's not going to go way down. May that happen? Yeah, there are days where weird things happen. But it should not be your consistent expectation. And trading needs to be built on consistency, not, lottery tickets. So lottery tickets are fun, but you got to buy a lot of them, and maybe you'll hit one now and then. And if you do, then they'll definitely pay for all of them. That's sort of the idea. But, you want to understand what those moves are, and your consistent move is that 1 deviation move. And, really consistently is the half deviation moves. So that's the S&P right there. Let's go ahead and check out a few of the other markets right now. We'll go through, throw the indexes. Usually it will act pretty much the same. Every once in a while they will separate from each other. But we had to move first an expectation down to 822. So you go right down here. Look at this. We got 822, and market just chills out. 1 deviation. It decided it wanted to move further, and it moved on down to 815 so far. The second deviation, which should be 811.7. So right now it's down that, and we got a half deviation. So we just take that number right there. Okay, so we take the number of 1 deviation, which is 822, and we subtract half a deviation, so 5.15 on there, and we get 816.95. So that's 817. So it's already pushing the 1.5. Right now, so it has a a decent chance to possibly go down to 811.7, and from there there's basically only a 0.3% chance it'd go below 805. So it also helps with your risk reward. Where's my stop? How far do I expect it to move? And it's not about like when you're looking at Nadex, you can sort of get tripped up on max profit. All right, look at expected profit based on where is the price going to be, based on where you expect it to move to next. And then looking over at the NASDAQ. NASDAQ obviously getting hit with a lot of things lately. And so the first deviation move on NASDAQ, we'll see. This will be interesting to see here. 2702.75 there. So 2702.75. It basically just busted that right there. It did pause right after it hit it. And then it moved on down, and our next move would be down to 2673, would actually be a 2 deviation move. So it's just a couple points off of 2 deviations right now. So we're only a couple points away from 95% of all expected movement on the NASDAQ for the day. So that might give you a clue. You be a little careful on going short at this point, and chasing the trade. So if you are, definitely be using very tight stops and defined risk, and Nadex would be a way to do that if you wanted to continue to try to short this at this point in the day. But again, it's only a few points away from having 95% of all expected move, and 99.7 of all expected move would be down to 2655. And we can hop on over. We can look at the Dow. So on the Dow right here, we got a move right here. Our expected move on the Dow was down to 13,361. And so we can see, boom, it hit that, and then it just chilled out right there, 13,360, 361 area. And then it's moved on down, and right now, let's see, our low on the day is 13,290. And we're not really doing impressive volume, by the way, on this latest break. 13,298. And so our next move down is actually down to 13,239 for a 2 deviation. And so we can see, okay, well, what is a 1.5 deviation move? And so I'll go in, again, and I'll just do the exact same thing. I'll just take the 1 deviation move. I posted these levels over in the Tiger's Den. But you can hop on over there and look at that. And then, so 13, let's see here, on a 1 deviation, 13,361, 0.2 minus 61. And that puts us down to 13.3. And we're sitting at 13.3 right now, basically. So the lowest we've been is 13.295. We're just oscillating right in that area at this moment. And so that would actually be a 1.5 deviation. So if it continues down, we will look at a move down to about 13.239 for 95% of expected movement on the day. And for 99.7, it would be a move down to 13.164. So it's sort of interesting just to watch these on these big days. And again, what do? Like, you tighten your stops. You look for potential reversals at these points. So if you are short, you're tightening up as it's hitting each one of them. And because usually what it's going to do is it's going to hit it and it's going to pause. And then you really just got to watch and see what happens for the next move. And you can place your trade, you want to have a tight stop at that point. And you're really watching volume to see the commitment on the downside. And then hopping out and over, we can look at some of the other ones. We got copper, man, it's just flying. down, flew on down. The pit's already closed down for the day, but we had to move all the way down over 3.6305, and we had a expectation of 3.631 would have been a 2 deviation move. So that was our 2 deviation move, which is basically right where it hit. Like there's 1.0 right there, so just right above that. And then a 1 deviation 3.682, so 3.682. So right in this area, basically where it oscillated, that was the 1 deviation level. And it's really rare. We look at these a lot of days, and it's really rare that we just bust through and go to a second or a 1.5. But it's a big moving day. Looking on over at gold and the expectations on gold. Gold fell down to 17.16. And we had to move expectation down to 17.26 for a 1 deviation. What definitely hit 17.26. And it actually pulled basically back up just about to that level and settled in there at the 1 deviation. And basically fell 1.5 deviations on gold. Hopping on over on silver. Silver right here, 31.945 and 31.945. Wow, so 32.25 would have been our 1 deviation move. And again, that's almost where it basically settled at, right up here, 32, you know, just a few ticks away from that. But it came in, stopped, and then did one more last push, 31.945, and also getting pretty close to that 2 deviation, but about a 1.5 deviation move on silver. And a lot of times you'll see the same deviation moves across the market. Looking on over at natural gas, meaning like, you know, 1 deviation, 2 deviation. On natural gas there, it went up to a high overnight of 3.647, and there was an expectation that it would go up to as high as 3.678, and 0.7 was 3.649. So literally just like, you know, basically a tick or so right off of that, and came back down, went back up to it, came back down, and just oscillated. So a lot of that move already happened overnight. If you came in late, sort of late to the party, you could have joined in, I guess, for one more possible small rally on back up. And but again, that's, you know, now you're not necessarily looking for some big move past that, because you already know that, hey, that's where it stopped, that's where it ran out. And hopping over, we can look at oil. Oil sort of been interesting today. It hopped on up and hit the half deviation level on the way up. On oil, moved up to 93.49. We had an expectation for it to go to 93.32. So it went just a little bit past the half deviation mark there. There's 93.32. You can see it hit it and just sort of oscillated there for quite a while, for about an hour, and then decided to drop. And when it dropped all the way back down to $90.34. And on oil, let's see, that puts us, wow, that puts us pretty low. That puts us about a little over 1 deviation move down. So it came back down, and it oscillated again right here at 92.45. And what that was, if you're looking at, just oil on a whole, that basically was yesterday's close. And so that was a half deviation move up. It chilled out for about an hour, half deviation move down, chilled out for about 30 minutes or so, and then it started its descent down to a full deviation from the close. So we had a half up and a 1.5 down total, but all those deviations were key points, and that's where it's settling out at. Right now we got it sitting at 90.69. And so looking over at oil, again, 90.69, 90.81 is a 1 deviation. So it'll probably settle somewhere, up or down 10 ticks from here pretty soon. Hopping on over at corn. Corn really, really quiet. I bet it didn't do anything on the deviations. Let's see. We got corn, and I haven't even really paid much attention to it today with everything else being so busy. But a half deviation move was 766.4, then up to 768.79. We basically hit a 0.7 deviation and then pulled back off that. So that definitely would have been the right take profit zone if you were long corn this morning, but it already did it overnight, so it shouldn't have been a surprise that it hit that level and fell back off of it. Just did a couple double tops and then bam, right back down. Hold on right there, and we'll be back right after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And glad to have you. We got this great movement going on in the market today. Hopefully you're grabbing a good chunk of it. And anyway, so you definitely want to know what is going on and how the market works. And I saw a post over in the Tiger Den with circuit breakers. Yes, you definitely want to know what the circuit breakers are on any market that you're trading. So whether that be a stock or whether it be futures, you need to, and if you're trading options on them, you need to know what the circuit breakers are. And you can just type in circuit breaker, stock, and you'll find the rules. I posted it the other day. Did the same thing on the futures, but you have to know what those things are. And it's just levels that you need to be aware of when the market's moving that level. And I mean, you can even plot them on your chart for the day, or put price alerts, and don't put it at the circuit breaker. Okay. It's too late once it's hit it. Okay. So put it above the circuit breaker, so that way you have at least a chance to flatten everything. If that happens, because you don't want to be in and get stuck in on stop limits and things like that. But Excellent. Check out a few things. We'll go ahead and do a wrap here on the day, and we can also look at what is coming up for tomorrow. So, not tomorrow, I guess, really. So, since we're wrapping up, I can't believe it is already Friday. Oh my gosh, this week has flown by. So, Sunday, New Zealand has a bank holiday. Their Monday, our Sunday. And you got a couple of reports coming out of Japan. Nothing major. And then looking over on Monday, we have an FOMC member speaking, and he's going to talk around 12:30, and the Aussie dollar has a report coming out at 6, and that's Monday. So it's going to be a quiet Monday as far as that side goes. Of course, earnings after the bell and earnings pre-market Monday will have a definite thing, and we see the index is continuing to push lower and lower on the day. And just do a current wrap up now at the end of the show. We got the S&P down 24.5. We got NASDAQ down 60. We got the Russell down 18 points. We got the Dow down 210. And looking on over, the copper's wrapping up there. It's down 2.9% on the day. Silver down 2.3% on the day. And it's easier to say those in percentages and how they tick. And then looking on over at gold, it's down 23 points on the day. We got corn just down 2.75 and soybeans down 6.5. On oil, it is down over 2% on the day, $1.98 at the moment, and natural gas down 1%. Euro dollar is down 46, pound dollar is down 45, and the Aussie dollar is down 37. And we had a pretty cool euro dollar trade. We put that on earlier, and we'll see if the markets just continue to push on through this level. But we already took our profits on that one, and it moved on down and filled all of our trades on that. So pretty excited. And looking at, let's see, what do we got? We got the U.S. yen is up 3. We got the U.S. franc, which is currently up 39. And we got the U.S. Canadian, which is up 76 points on the day. And so just a great day, but one of those things that, I hope you were trading smart, trading wise, and limiting your risk. And you can trade these markets. Futures are scary, okay? Just whoever you are, they are scary. And so you go to Nadex, and you can trade futures for a $20 risk, $50 risk on a trade, and still get massive leverage on the trades. A lot of times, often, and I've done all the comparisons, the leverage is much higher in your favor on Nadex than it is even on a futures contract. Even with day trading margin, you even get better leverage often. And but you don't have the leveraged risk because your risk is capped. And so if you want to get into futures, you're seeing all this movement, you want to check it out, or if you know futures and you want to go, what is this about? Again, hop on over to nadex.com and definitely check that out and see what you can do. And we got just a little bit of move left right here on the euro dollar. I don't think it's going to move too much further, so I go ahead and I went and flattened out the other half of the trade, but just to close it out because we had this spike and it pulled back up and we're just sitting at that area. So with that closed on out and, made a decent little profit on it. But I hope you all have a great day, a safe day, a wonderful weekend. Get refreshed, get relaxed. It's a new week next week. I'll see you then.